apologize in advance for the crying cat. He's very needy. I swear he's fed and he's fine. He's just noisy. Eventually, he'll figure out that he can just come over here and sit in this room and then he's fine. But he's young and shy, so I might have to go get him if he doesn't show up. But he usually, once you ignore him for a minute, he usually stops. So I was gonna give him a second. Let me just go get him. Come here, Pat. Or just run away. That's fine too. Come on. Come here. All right. He'll be back, I'm sure. He's a brand new cat. He's just getting used to the environment. It's all good. Okay, so we're looking at NQ. He's gonna be really noisy. I'd really like to. Well, at least we know that we should know that the microphone's working now. Now that he's awake, the microphone's working just fine. But we are looking at NQ here, and then I've got ES on the side too. I'm checking out the 8-tick and the 6-tick. Primarily looking at this is the 24-tick Renko. Come here, Ronan. Come on. Come here. Come on, cat. Yeah, so this is the 24-tick Renko, which is what I primarily trade. Sometimes if it's slow enough, you can trade the 16-tick. Like this is actually a pretty good setup right here. And then I'm playing around with a new channel. It's just a new idea. I don't have any trade setups with it. It's just yet another thing to busy the charts with. I'll probably end up just keeping the regular one, but I'm basically just trying to see if I like one more than the other. I may take out these purple lines and replace them with these bands. That's what I'm trying to figure out, basically. But I'm also curious if I can use them similar to a TTM squeeze, where when they're inside of the blue channel here, if it may suggest that we are winding up for a bigger move. But like I said, I'm just experimenting with it. I really don't know if it's even going to be useful. But I have noticed that I've not been paying as much attention to I do watch the middle line, but if you look at Simon's charts, he's got the orange and the blue as the primary, but he sees this as this is the lower and this is like upstairs, right? So like downstairs, upstairs, and you want your sells to come from upstairs and your buys to come from downstairs. That's the basic idea. Wow. Well then come here. Stop running away. Come on. Come here. You have everything you need. What? You just want to go to bed. What? Come here. Okay. Come on. Alright. Once he's sitting on my lap, he usually shuts up. He's just really needy because he's a sphinx and he's young. Anyway, so yeah, the idea with what we call the radar in Trade and Perform is that we don't want to be taking signals long that fire up here like this. The only time you would do that is if momentum was really strong, in which case the actual bands themselves, like the lines, will be going at like 45-degree angles. So for instance, like this, you could potentially sell this one. But you can see that in the Trade and Perform room, things are simplified for good reason, because there's so many people in the room trading different variations on the algos. And so we kind of need a way that's like just enough for every style, but not like overwhelming. So what we do is Simon has his charts, which has these and then maybe 2 more indicators in addition to this. And then anybody who's just like a regular member can watch his chart. But then if you're a premium member, which still is not that much more, it's I think it's $99 now to be a regular member a month, and to be a premium member, it's like 250 total. So for the premium members like me, we can get the desktop version of this, and so we have the algo to like customize. And so what I've done is I've customized it by adding some other studies and filters and changing some colors, and that way I can experiment with some of my own ideas, because I've been trading for a long time, just not scalping futures. And what I'm learning is that a lot of the things that work quite well for swing trading, you can apply the concepts to scalping futures. You just have to consider the fact that everything happens faster. But if there's a technique that works relatively often with swing trading, that same concept probably has a place in day trading too. Not everyone agrees with this, and there's certainly some things that's not the case, right? So like things like moving average crosses, right? That might work good enough for swing trading, but not good enough for day trading, and just not good enough for leverage. But if you can find at the same time that moving average crossover really only works, 30% of the time or something. It's like only when it's trending in that direction, and only when it makes a certain retrace, right? Like there's conditions where it works really well and conditions where it really doesn't work. So like you wouldn't want to use that technique for scalping futures, even if like you just shorten the time frame. You're not going to improve your win rate, right? If anything, your win rate's just going to go down. So it might be okay when you're swing trading and you can have a very large stop. Like your risk can be a lot of points, right? Because you're not using as much leverage. Maybe you're using options or ETF shares or something like that, and you can swing trade with or using stops in ranges that you would never be able to use with leverage of futures. So, but if you can find things like conceptual things, not necessarily like entry signals, but concepts, like for instance, looking at how we make decisions about which side of the market has traders trapped, or which side of the market has like an imbalance, right? Or looking at the profile, for instance, and things like that, where you might not have a trade trigger directly associated with it, but like some axioms, like just the way the markets work. And if it works like that 60+% of the time, with swing trading, it might not help you very much, because you don't have enough information to actually like trigger the trade. But it turns out when you zoom in with scalping futures, those same concepts are actually applicable still on like a micro level, like a fractal level. And so all of a sudden, when what you're really making decisions on is actually like who's trapped, who's in control, where are they trapped, where can I extend this level to, right? Like that's all I need to know. I don't need to know so much about like location and all of that. Like it is important, but it's more important with like where do I trade and where don't I trade. But I don't, when you're swing trading, you have to, you run into all sorts of problems because you're using such a big range. That's what I'm trying to say, is that like the range that you have to move the instrument to make it worth your time, you end up having to like have a lot of uncontrollable out of your like sometimes things happen like overnight, for instance, where you can't even be watching the market and things like that. So there's a lot of stuff that actually does work scalping that you would never try with swing trading. But there are, like I said, quite a few things that I'm finding where the concept, I applied the concept in swing trading to make a trading technique, and the trades themselves didn't always work out how I wanted, right? It like wasn't a super powerful swing trading technique, but the reason wasn't because the main concepts were wrong. It was just difficult to identify where to get in and where to get out, things like that, right? And the algo kind of solves some of those problems for me, where it can filter out a lot of the noise and show me where I might want to be active in the market, and then I just need to know which side I want to be with, right? So if you have trouble figuring out, like, is this going up or is this going down, like, what I would recommend is study things like the profile, um, study things like order flow concepts, and maybe even some longer term like trend following concepts, right? Maybe not techniques, but concepts of like mean reversion and trend following, and just the way people think about markets when it comes to technical analysis and making decisions based on price and volume, and then see if that same concept can be used on a smaller time frame, and all of a sudden you may actually like come up with some clever ideas that might be relatively new to you. So yeah, that's just a little hint of things that I've discovered. But yeah, that's where these bands are coming from here, these shaded ones, and I'm really wondering if perhaps the way I can use them is just identify where they are relative to the channel, the blue channel, or the purple pink channel, right, or even the midpoint maybe. And I might get some information about what the what like where the momentum in the market is right now, or if there is any. But I'm not adding it to my primary chart because I don't want to not see things that are like trade entry related, since I don't have any trade related things. I don't have any entries with it or exits or anything. Like, I'm literally just watching it to see if it's got any use whatsoever, which is what I always do with new ideas. Is I put it on a tertiary chart, usually on a different screen, but I'm just showing you guys here because I've got a new idea. And yeah, see if after, like, when I know what the trade, like how the order flow was going and stuff, like what if it was fast and if it was yeah, like even especially after the fact, right? Like, for instance, this is a yes, but this drop that we had here, this happened right at the close, if I remember right. This is Central Time, so I think that's correct. Yeah, I think it was right at the close. It you can see that if you look at the bands here, that we've got the the blue. Let's say, think about it as three different channels. There's a pink channel, a blue channel, and then these shaded, like whitish orange ones, right? So if we think of those as three different channels, you can see how price got all the way out of all the channels, and the top channel actually tried to get outside of the blue channel, but here it failed to hold outside. See that? Right, and then the same thing happens down here. We get underneath, and we start to capitulate here, and then they retest, and you can see it's still underneath. So you really don't want to be committing to longs here, is what I'm thinking. And this is still underneath the midpoint. But then, as you can see here, we start to pull back into the channel, and if you watch when this lower channel interacts with the blue line, and the upper channel is clearly either rising or touching the mid, it looks to me like we're getting a lot more, it goes back to mean reversion or bullish, right? So now it'll start to basically move across the channels rather than getting stuck under it. And previous to having this white shaded channel, I wasn't identifying like the pattern for, like, it was just like, oh, it's under the blue channel, right? So, but like when I added the bands, I'm starting to see that there might be a relationship basically between, oh my god, stop, between the location of the bands relative to the channel itself, and then the like the price as well, right? Like, this kind of distance from both of these seems to be really hard to sustain. So like, you can see up here, it's very normal for, like, once the volume gets outside of these bands, if it's not bullish, and right, and you get it closed down here, they're going to start closing either under or inside those bands. And then look, the pink channel, this one rejects off the pink channel and then falls, right? Where is this going? Probably the blue channel, right? So it gets under the blue channel, can't get any further, starts to retrace. Where is it going? Probably to the other side of the band. See that? So there may be a pattern there. I just don't know. Like, so it's on a tertiary chart. It's just a new idea. I have no idea if I'm going to keep it or not. But you know, a lot of times that's how the chart gets so busy, but also how I can sometimes filter things out. Because if I find, for instance, that like there's only certain conditions where I even want to take a trade, like perhaps like only when the top of this or the bottom of this band crosses underneath the bottom of this channel, maybe that's the first time I should be looking for longs. Well, then rather than actually seeing the channel, all I got to do is change it into like a dot or something, right, that like shows up on this bar. But I won't know what I want to test out until I actually watch the raw signal, and eventually they like, and that's the same reason why these are here too, by the way. These will eventually be replaced, and they already somewhat are. The shading in the background, and then the little sideways blue and yellow arrows. So they look like, here, I'll find right here is the bearish one, and then the bullish, and then there's another bearish one, but it's on the wrong side, so this is going to be a trap. So now it's bearish. See that? Because it's going the wrong direction. So, and then see how this one is like way at the bottom. So this isn't ready, but it's saying it's bearish, and then when it gets trapped, it can be quite bullish. See that? So it's not perfect. It's not just like when you see a yellow arrow sell, right? It's not there yet, but there I see what to do with it. It's just a matter of back testing it and making sure that it's consistent across multiple markets. A lot of times these things work for a bit, and then things shift, like speed increases, for instance, and suddenly like the technique, like you need to massage the technique a little bit. Like rather than waiting for the retest, maybe you just have to take the breakout and accept, like maybe with smaller size, because you're going to get a lower win rate, but you might just never get retraces anymore. That's actually that's what happened. When was it? March, June, when things got really fast all of a sudden. There were a bunch of stuff that we were using that required like a bounce, right, like a retrace, and like that's it just stopped working. But like thankfully with the team and everybody sort of coming up with their own tweaks on things and studying things on their own and then bringing things to the table, you know, my charts might change all the time, but the actual in the room, what they're looking at is actually significantly simpler because it's just the stuff that everyone agrees on, right? But those of us who are like who enjoy the actual like investigation of finding new ideas and backtesting and all that, like I enjoy that stuff. You don't have to do that. You can just kind of learn what everyone else is doing because you know the group has been together for 6 years, I think. So it's it's already developed quite a bit. It doesn't really need any more development, but the process itself has always been enjoyable to me, and I just see stuff and decide to test it out. So, but just keep in mind that although it's very, very colorful and confusing, I've learned this first, right? And even this, I had to simplify it. So like I took out most of the signals and just like practiced finding a pattern. And so like pink bar or purple bar followed by a star, for instance, is like a very simple pattern to start looking for. They won't work if they're on the wrong side of the channel, but like, let me find one here. Here, pink bar followed by star on the correct side of the channel. Stop up here, entry inside of this range, any of these candles, boom, right? Are you gonna get a lot of them? No. This one's too far down, see how it doesn't give you enough of an extension? But then once you get over this, it becomes a trap, see, look. So this is the aggressive short, right, or the aggressive seller. He gets a small extension, expects more, price gets above him, comes back in, can't get below him, and it goes higher. See that? So you can scalp off the area too, and then if they reject it, well, now it's going to go lower because now you've released him, right, and probably trapped this guy here. So like once you get used to sort of seeing what you're looking, here's another one, pink bar, star, right? So stop goes here, entry goes anywhere in here. You wouldn't know until this close, so you get in on this bar somewhere, right? Maybe like an entry there and an entry like right there, right? Like with a stop border right there to like add if it continues, and that one just like falls away. It's going the wrong direction, so this one's a trap. Right, so once you get, again, same exact thing as I said before, once you get above this, like that, now you look, I don't think this one worked, but now you look for a bounce off that area and then an aggressive buyer, and see, he just didn't show up, which is great. So it's just not triggered. Sometimes you drop them and it just don't matter, right? Here too, no, like he could have gotten trapped here, but he didn't. Well, he did, and then he got immediately released. Here's the bullish version, purple bar followed by star, goes up. Right, so I learned that one first, I think. There's so many though, you guys. There's just even with these, and so you get the idea. But like I said, are you going to get 70 trades a day with just one? No, but you'll get some. They don't all work. Purple bar, star, stops. But then once you get over him, right here, you can look for a star off of that and get long. And so you catch it there. So there's, like I said, it takes a little learning. Yes. Yes, it does. It does take time to learn. You don't have to know what all the signals mean. You just need to be willing to look for the patterns, right? And then like understanding why taking this purple bar star is not as good as taking it if it was down here. And like actually practicing it so you can train yourself. And like this one too, right? Like this is not downstairs. It's in the middle. It doesn't mean you're not going to get a lift. It just means your risk reward is like not as good, and you're potentially going to get the market to come down, stop you out in the exact spot you should be getting long, and then going higher. So it's a mean reversion technique, and the win rate's high, which is why a lot of people start with it. The win rate's really high, but the number of times that sets up is lower. Now, once you get that right, you could add a new one, a new signal, such and with it has a little bit more opportunity, like a momentum trade, right? This one can actually be worked as either one, and that is a triangle followed by a star. That you can see the triangle's going in the opposite direction, just like the purple bar was, and then the star's going up. This one happens to be pink too, but that's okay. So, but again, you want your longs down here, and you want your shorts up here. So like this triangle down star over here is not going to give you much, because this is your target. Your target for the longs is this, and your target for the short is generally this, right? Generally. So here I'll find, and then the other side of that would be triangle up followed by star. So this one works. I've gotten pretty good at looking through there, and he's got these triangles too, which are pivots. They're called power bars. That's not the ones I'm talking about. Those actually are a little bit different. So we're looking for nothing here that I see. I'm trying not to skip the ones that are. It just doesn't show up that often. So this one's in the wrong spot, but it still actually works. This is purple bar star. So this one fails here, right? Just fails, and then you can retake it. Since it fails and then it works after that. The location's still right. Like I said, they don't show up all that often. I might have missed one or two. See, these are going in the same direction, so that's not a short. It's got to be a star down to be a short. This is in the wrong location, so that's a trap. So the other, like one, if you learn these and you know them now, once they get over this, the bounce off of it is another scalp, right? So like there's patterns, right? Like once you've learned one, the next one's easier, and then it's just a matter of like, okay, practice that, see how much it works, decide if I want to take it or not. Some of them you won't like because it's like doesn't happen very much, or they like don't set up the way you like or whatever, and so you skip it. But like another really really simple trade that we use is these power bars, which are the pivots. So if it's balanced, in other words, if the lines are straight and most of the price is inside here, if you get underneath one of these and then immediately come back up, or get over it and then immediately come back down, and that down bar or the up bar that traps that pivot has an algo signal, it's a pretty good mean reversion trade. So you can, if this one would have had an algo signal, it would have been one, but there's no signal there. It's got to be straight, flat, so like this. Nothing. Here we go. So here's this one, right? That's associated with this bar. So this bar got stopped out. After getting stopped out, it came back down with a star. This one took a little heat, but you're getting long somewhere in here. Your stop goes up here, and it goes lower. Like this worked, but you wouldn't take it because it's not flat. But technically, you had one here. Oh, there's no star here, so technically no. There should have been another. I don't have all the signals in there. There's another signal there that I noticed, but on my other screen, but it's not on this one. Sideways here. Here we go. This one triggered. So pivot gets taken out, comes back with a star, long, right? And again, like, does it take time to learn it? Yeah, but once you know what balance looks like, it just didn't set up here. It gets easier. Pivot gets taken out, comes back with a star, short, right? Now, and like I said, your stop goes above it. This is a bigger stop, and the entry can be anywhere in here, right? So you could get short right away, and then as it pulls back, you could add like another contract, right, to like improve your risk reward. And then let's say your entry was like right at the edge, like 88, right, and your stop was like 06. And so in this one, risk reward wise, oh well, this is kind of unfair because it just like died. But let's say you were just looking for what we usually get, which is this, right? So wherever we were, blue line right here is usually what we're getting, 58.50. That's 30 points. Like, to be completely honest, like that's a decent morning for me, right? Like just going back and forth. So anyway, it's easier to see them when you don't have as many things to look at. But once you learn some of these, like it's a little bit addicting. I'll be completely honest. Like you start to like realize that you're not going to catch every single move, obviously, but yeah, you get a little. I'll never trade futures without looking at this. It just makes things like it actually makes me feel like I really have an edge. Whereas without it, I'm always wondering like, is it an entry? Is this good enough? Like here, it's like, okay, is there a star there? Well, yeah. Well, okay, then did it meet all the other criteria? Yes. All right, then it's a trade. And I know that it'll either work or it won't. And when it doesn't work twice in a row, I usually take a break because they work 60+% of the time. So if they're not working twice in a row, I'm probably wrong. But sometimes it just does take a couple tries and you just need a break, right? So this one is too far away for me. These are volume waves. See that? And so when we have high volume going up, or sorry, this is the down volume. So see how this down volume is still rising? If it breaks over this, and we have more volume on this down leg than we did on this down leg, then it is clearly not balanced. Because volume's increasing as sell volume's increasing as price is decreasing, right? So there's no reason to fight this. I don't want to treat this as mean reversion. So even if the algo sets up and like gives me a star up here, if there's too much volume going down and if there's people trapped, see, look, all of these guys, this one for instance, he's trapped now. So my target on a long would be here. So I'm not going to get long. See, the bar will close at the green or the red and that is when I will know what the algo signal is. I would have to get in here and target there. That doesn't make sense, right? So it's not a long. Um, on this one, there was no signal. On mine, there was, but that's because I have extra signals. um, because I'm a crack addict. And yeah, even though I still don't catch every move, the potential's there pretty much any time. For a like, I can, you could basically make it as strict or as liberal as you want. If you want one setup and you only want to trade that setup, that's cool. A lot of people in the room do really well like that. They just specialize in one, get so good at it that they can trade it bigger size because they know exactly how often it works and exactly what it looks like when it doesn't work. So I know that I'm not looking for longs here. That's the most important thing. This red underneath here is to remind us that price continues going and doing what it's doing once it starts moving. So this is a sign of momentum, and there's really no reason to fight it. But if I did, my target would be back up here. So it would be a very, very, very small scalp. It doesn't mean it can't come back up there, right? When would I fight it? Well, once it finishes, see, there's the star, right? So watch how quickly this probably rolls. It's like the algo recognizes that there's a potential mean reversion trade here. What the algo doesn't realize, because it would be really hard to tell it, is that these trap traders and all of this momentum is going to create a resistance zone. So yes, this is going to go higher, but how higher? Well, probably here, right? Like that's probably all it does. And so if you can see that, you'll do fine. The hardest part is just learning the pattern, practicing it, and then recognizing that just because there's a star does not mean we're just going to auto buy. We need to know, do I want to be getting long here? And like I said, that is a question of whether or not you are super aggressive or not. Because it's not wrong, it's just you better be quick. So I drew the volume profile here of this down wave because we made it to a new low. See how this low is here? Now this is a new low. So when we make it to a new low, what I want to know is where the volume builds are. So you can see there's two of them. There's one here. And then there's, well, there's technically three. There's this little one. And then there's the POC, which is right here, right? So what I need to see happen to even think about getting long is I need volume to fill in here. And then I need them to come back and hold this general area. They can test down here, but they have to immediately bounce back with aggression. And aggression looks like a star on this one, or on mine, it can be a green bar or a blue arrow, and that's about it. Those are the big ones. And even the blue arrow is it really doesn't work as well as a reversal. It works, just not as often as the star and the green bar. But you can see I've changed some colors and stuff too, and I've added these background colors to give me some extra ideas of which direction we're going. And so when it's colored and then it's not, there's a shift in momentum. So there's a potential mean reversion trade. So like here, see, it's colored, then not colored, and then if there's an arrow, it can go down. So this triggered, but that only really works in mean reversion. And so if this is momentum, I just don't want to, for the same reason as I was just saying on this one, it's the same chart, right? Those trap traders are going to cause problems for me if I'm a buyer here more times than not. And like I said, the times when I'm wrong and I could have been aggressive, what's going to happen is they're going to come up here, they're going to pull back, and then they're going to run. And so I'll just catch this one. But that's just my style. There's plenty of people in the room, including my coach, who will take this for an 8-point win with like tons of contracts, and like and he uses those techniques to like dig himself out of holes, which is cool, but just not something I'm comfortable doing. If you can stay cool, calm, and collected, and you trust the system, and you know it's going to get to like this purple line really often, you can do it. But in this case, you're getting in at like, let's say 11,500, and I mean really your stop shouldn't go any higher than like, let's say 86. So I mean it really is like a let's say a 15-point stop, give or take, and your best case scenario is probably either this. So this point, the little dash is where all the volume is, the point of control of the bar. So that's usually where it stops. It didn't actually make it there yet. So that's 510. So you get 10 points. There it is. You'd get 10 points for risking like 15. Is it horrible? No. You know, it's not horrible. It's just you gotta know how often that works, because that if that only works 40% of the time, that's a problem. But if that happens 65% of the time, then you're probably fine. You just got to know that this is not the time to hold runners, because the chances that you're just going to go are so low once you've gotten this aggressive trader trapped. Any of these guys, these stars getting above where all the volume is a problem for buyers. The exact opposite, of course, can happen if we trap an aggressive seller at the bottom, but there isn't any here. The purple bars and pink bars are actually signs of weakness in that direction. So that is not an aggressive trader. What the purple and pink bars are actually, if you're curious, is when on the DOM, if you ever watch the DOM and you see that there's like, or I don't have the full one on Ninja, but if there's like an order here, let's say for like 16 contracts or something, and then price approaches it, and as it starts to put contracts, like it starts to do business at that price and fill contracts, all of a sudden that 16 just changes to a 2, right? They pull their order, and then price runs through it. Everyone's seen that, right? That's what the algo is telling us when they see purple bars and pink bars just in different directions. So like here, the aggressive trader came in, and suddenly all the sellers pulled their orders, right? So like in this case, that weak move up, it moved up because they pulled their orders. They didn't have more contracts, like more aggression. There was just no sellers. So you don't want to sell this because there's no sellers. But if they then create aggressive move to the downside and it's really bearish, you could have a momentum trade, right? Which is why, and then and if it's way up here, you could get a mean reversion trade, which is where like pink bar followed by star comes from. This one isn't a star, but if it was, it would be a short here. But like I said, it just didn't trigger here, and that's the biggest complaint of the algo, is that you're not going to catch every single move, and some people have a really hard time waiting for their setup, you know, me included. And the way I've dealt with it is I just keep finding new setups and keep testing new things until I have enough where I'm like so busy interpreting it that I really don't feel like I'm missing anything, because I don't take everyone, but just that sense of knowing I could have taken a scalp here, like gives me some satisfaction that I know the edge is working, and it can give me some information about whether or not I want to continue trading in that direction. Like when this works, when I get that arrow and it drops, even if I didn't take that trade, I'm now way more confident taking shorts up here, right? Because I know this works primarily when it's bearish. But the funny thing is that they then triggered it the inverse triggered bullish, and they're actually getting a bigger move than I expected. So it's like sometimes you can get analysis paralysis because there's just so much information that it's like, which one do I listen to, right? And so it's really key to learn. I've been working on this for more than a year, right? Like you do not build something like this in a week. Like you start very simple, like simpler than this, right? With one pattern, and just learn that. And you can turn everything else off, you know? And then if you need it, you slowly add more. So I try to do a little bit of both. I know this one is overwhelming, but the nice thing about this one is we're almost guaranteed to find a trade. It's just a question of whether or not we want to be aggressive. So I don't want to make people dizzy flipping back and forth, but when things potentially set up, I can show you what the room would see, right, without all my extra stuff. But yeah, this scalp would have worked. It's too aggressive for me. Come here, cat. Noisiest cat ever. Come here. Yeah, get over here. Oh my goodness. No, don't go in the closet. least he'll shut up if he's on my lap. Well, look at this. And a nice little move. Yeah, so I don't have anybody trapped down here. I'm surprised to see this move, to say the least. Sometimes ES has the signal and NQ doesn't. Here you had purple bar star, so that's good. Here you missed it by 1 bar. But like I said, I would only take that in certain conditions, and usually it's got to be really like quote unquote oversold or just not that bearish. In other words, like balanced, because it is a meme reversion technique. But I mean, it works a lot. So I know plenty of people in the room that do just fine just trading that one pattern. It's a good one to start on because it really does work a lot. Let's see. Okay, so we got to the midpoint here, which Simon doesn't have on his charts, but I like seeing it because a lot of times it acts like a magnet. And notice the top band here on the 60. Yeah, here we go. So there's this pink bar star, but it's it's at the middle. See that? So if I want to be short here, I usually don't take this short. I wait for the pullback. Sometimes it means you miss it. But a lot of times they'll try to save it here. Just because we're so far down. But if it's bearish enough, they will just sink it, and they might. But what I'd like to see is a bit of a bounce. Did I get volume above the... Hold on, let's make sure that it's bearish. I don't want to make a fool out of myself, and plus I'm up for the day, so... Okay, so there's our DVP. Here's... Yeah, so I've got it there correctly. So this is where all the volume is. And then up here. That might be... It may be going up here. It may be heading for this. If it's not going to turn around here. But we... it's so close. The volume build itself starts right about here to here. So we have to ask, did this bar put any volume up here that closed bullish? This one, it was in the top of the high volume area, but not above it. And then when they did get volume of it, which is this dash, and the yellow line just connects the dashes, look how price reacted. And we saw it. It just like plummeted, right? And that's why it's purple. Like, they just pulled their orders, and everybody market selling just got a little slippage, right? They were possibly, because there were orders there apparently, and you just saw price was just like boom, boom, boom. So it doesn't mean it can't be beat, but when you see that in the middle here, it's often a sign that buyers are actually way extended, even though it doesn't look like it. Like, they might not be up here, but if you think about it this way, if most of the volume is supposed to happen inside this channel and price gets to the middle of it and they react like this with aggression and everybody just quits, like, something doesn't smell right if you're bullish, right? Whoops, I did not mean to do that. Here, let's just get rid of that. Raise volume profile. I already know where it is. It's this yellow line right here. Okay, so they're trying to trap that guy. Cool. Purple bar followed by pink bar, star followed by star. So basically this whole area is going to become a pivot. Whenever we get those two here, and it's the same thing on Simon's. So inverse bars, right? Like exactly the same, only on the opposite side of the market. So the first one is an aggressive seller that hit and buyers gave up, removing their orders. And then after that closed, an aggressive buyer came in and sellers pulled their orders, right? So you can look at the overall trend and you can say, well, bears seem to be in control here, more likely than not. So you could guess, right, and just be like, well, I think even though I see this, it has not broken this top, and if this was a valid sell signal, so this is just an on-sale opportunity, right? Now this one is a purple bar and a star, so it's not ideal, but if it's bearish enough, it'll work. Preferably, we'd have a purple bar here followed by a star, and preferably it'd be a little higher. But from experience, I know that these actually work pretty good too. And then, yeah, especially if you can get it up for cheap, because you really don't want to see price go any higher than that. Wow, another purple bar. Interesting. So they're going to chop around here for a while, looks like, because the purple bar suggests once again that but there's a lack of any aggression. I guess they could put a star here and then be all over. But what I'm guessing is someone's going to have to put volume in either under here or over here, and then retest it probably from below. So I'm guessing it's going to go down, up, down. That's if I had to guess. That's what I guess is going to happen. I'm technically not supposed to take momentum trades because I overdo them. But that's just from personal experience. I can get a little bit juiced when things start to increase in speed, and rather than waiting for the high odds trade, I'll be like, it's bearish enough, I'll take it, right? And while it pays off more often than it doesn't, the times it doesn't, it can tilt me. Primarily because I know that that's my tendency, right? So I just get frustrated. So my coach has suggested I just call it quits when it comes to the momentum trades and wait for those higher on setups, which is good advice. Because, yeah, taking stops when you really shouldn't be is, you can give away literally entire weeks of work just from like trying to prove something to yourself. And this isn't the place to do it. Like, do it in sim if you have to, if you just want to experiment. But usually it's just like, I know this is going down. And as soon as I start thinking like that, it's just like, shut the market down, shut the broker down, stop trading, you're tilted. But that's what's nice about having a group, honestly, is when you say stuff like, to the moon, people are like, if you're trading momentum, you need to stop. That's a sell signal, right? Like, or like the other one is if I'm posting charts of like winning trades, be like, dude, check out this entry, I'm still in. Everyone's like, I sold. Not because I'm in, but because I'm posting it. And so if it's gotten to the point where I've taken a screenshot and I'm showing it off, if they're in the same position as I am, they're like, yep, this is a good time to go. Ben's boasting, time to exit. So I like I said, I'm not actually the exit liquidity, but I can be the exit sign when my emotions get a little bit juiced up. So the easiest way to handle that, in my short experience doing this, is to go back to the trades you don't work really often but don't show up very often, and just only trade those. And that way you don't give away, like I said, days and days or weeks and weeks of work in an hour. Okay, so I mean, we tried to go lower and they failed. It's still stuck in here. This is the problem with fucking Globex, and it just sometimes just doesn't fucking move. But this whole thing has just become a pivot. That's why I made it all gray. It was a low volume node, which kind of makes sense that we'd filled in this volume. That's sort of what I expected to happen. But really, if we can get a buyer to show up down here, we could actually get a bounce. Alternatively, we need to get down there, test up here, and then sell off. So one way or another, I am not going to take a trade inside of here, for sure. But yeah, I'm pretty sure the next move is lower. What I don't know is whether or not we're going to do this or this, right? But usually when there's a pivot here, it acts as resistance and support. So we'll see. This is the PLC. We have not seen anyone defend it yet, really. This guy met it, but didn't. When I say defend, I mean we went back into it and then bounced. Like this one didn't actually reach it. See, the volume is down here and then up here. So he's trying to push through this volume and he's not really doing it. So that's why my guess is we have to go a little bit lower and then we see what happens. Do we get a sell signal or do we just get a buy signal there? And since it's getting a little bit late, I will probably take that trade and then be done. If it sets up. Like I secretly want it to go higher, but truth be told, it looks really bearish. But usually the more reliable trade is probably just the short sets up. And then pays me like 15 points and that's it. and I short into the low and hopefully don't get my ass kicked. But like I said, if it bounces here, it can be a bigger trade. It's just less likely to work. The fading is tough. I did not expect this just to rip. If this just goes, I was just straight up wrong, but at least I'm not short. Yeah, I'm not totally sure how they expect to get. Okay, I guess what might work if they can get this guy to well, yeah, this now the star's gone. So I was gonna say if they can get an aggressive close here. Once it closes, it won't change, but it can. The signals are just like right for now, and it's a live candle, live bar. The signals are saying that like those conditions have been met, but the bar is not closed, so that might change between now and when the bar closes. Once the bar closes, the price it doesn't change, so the conditions don't change. But yeah, you can see them disappearing and reappearing while it's live, and it just kind of is giving. It's not repainting; it's just actually warning, like giving us forewarning that it might print there. True repainting would be like it was a star, and then you go somewhere, and then you look back and it's gone. That doesn't happen. But while it's live, you have to wait until it's dead, right? It's got to close before you really know. You might be able to enter in that range, but you gotta wait. But like this star will never disappear. This will always be pink. This will always be purple. Like I could go back years from now if I still have the data, and it'd still be right. So. Which makes back testing possible, which is another tangent of like improving confidence by knowing what your best which trade is your best trade. You can also use higher time frame charts on the Renko to get bigger picture ideas because you'll see patterns here too, the same exact patterns. So for instance, if this was neutral, and it might be, we stopped him out, and so if this was a star, it'd be a pretty good trade. On mine, that would be a green bar, most likely. But I don't have the green bar on this version. Simon did add it to his. I've been using mine, so I haven't added it to that. But like I said, we all kind of try things like here. The green bar looks like this. And it's a sign of volume shift and absorption. So it's based on the footprint, right? So I can show you. I built it, so this one I know. I didn't build all of them, but this is one I did. So we're gonna put a vertical line here, and then the other one is orange. Let me find the other side. Oh man, come on, where are you? Orange bar up here, maybe. They usually show up at the edges. So this one got trapped. There's one right there. Doesn't work very well, but that's it. So now let's look at this. So we're looking for vertical lines that are green. There we go. Okay, now the timing isn't going to be perfect, but that's when the bar closed, I believe, right? So the idea here is, I don't remember if there was a low. It might be this too, because this actually looks like absorption to me. I can't tell if the vertical line would be the beginning or the end. I can't actually tell. 1430. I can look. 1430. 1430. Oh, I see. This is the down. 1430 is where it started. So I'm wrong. It's up here. So this is the absorption. Up here. So if you can just look at this and see it, cool. I personally have a hard time doing that, right? And then the buy. I should say it's not a buy, it's a bullish sign of absorption right there. And so this is right here. Not that. This, right, is absorption. And why is it absorption? It's related to what happened there previously, right? And where volume was previously compared to where it is now, if that makes sense. That's what it's looking at. And so, like I said, you can just trade by watching this. Like, that's okay. If you can see it, then like you don't really need it. But when NQ is moving fast, I am not very good at interpreting all those little lines and numbers. I see it in retrospect, but when I'm watching the algo, it's just like it's green. Like there's no arguing with color. You know, it either is or it isn't. I don't have to wonder like, is this enough absorption, or like, is this enough aggression? Right? Like that's not a concern, because everything's just turned into a video game. It's just like, can you hit A fast enough after you see these two bars print in succession in this correct place? But and like I know that sounds simple. It's simple. It's not easy, right? It's simple, but actually trusting it and following through every day and not doing anything else is harder than you think for most. Some people catch on really fast. It is. I am not a great student. I'm a good teacher. I'm really good at understanding things. I'm not very good at executing them how I'm supposed to. My brain just gets into creative mode, and I make all sorts of excuses for why this situation, the rules don't apply, right? Which is partially maybe just a discipline issue, but I'm actually quite good once I make the rules. I'm quite good at keeping those rules. What I tend to do though is just make those rules way too complicated, and then the mistakes will be mental mistakes. So, like I said, the goal eventually is to choose just the signals that I'm using all the time and simplifying all these, and rather than like constantly trying out new ones. Really, the solution to this game is to have something simple and just do that, right? But yeah, and so I switch back and forth, but I find that having new ideas that I'm kind of like churning through my mind, even though I'm not trading them, I'm just like, oh, let's see if that's working. What that way, like when I know there's no trade to set up, I've got like something to keep my brain occupied with. And then when I see something set up that I actually can trade, I can be like, okay, focus in on just that signal. I don't care what any of the other charts doing. All I need is to know if this is going to print a star, you know? And so that, it looks more complicated than it is because there's so much added on here that I'm not actually using to make decisions yet, right? And once those decisions are simplified, rather than having so many things, I can just say like, only show me the arrows that come after the purple backgrounds. Like that's actually an idea that I've considered, right? But the only way to know is actually to back test and see it, and to see if that actually works in many conditions. And so, like, I'm just kind of sacrificing my screen space to watch it because I guess there's a little bit of pride in like coming up with the idea, and it is kind of exciting, like coming up with something and sharing it, and then seeing other people like join you in trading it because it works. That process is almost as fun as actually executing the trades. But trading isn't all about having fun though, right? So like if it's costing you money, you gotta change that, right? And so I have had to actually pare this back. It used to be more busy, believe it or not, and just kind of I have so many ideas. And so instead, what I've done is I've actually taken the individual ideas, and I know there's a lot, and like save them as different layouts so that I can choose one, like which experimental idea I'm going to use. Like I even have some that are called like experiment A and so right, like, and then just see how that's doing in these conditions. Because like I said in the beginning, the truth is that as conditions change, strategies change. So stuff that was working when it was slow summer trading, it's probably not going to work very well if it suddenly gets super messy. And so knowing, like having like a portfolio of strategies that I can just pull out of a hat and be like, hey, maybe the speed traps will work now because they used to work when it was like this, and all of a sudden you have a new trade, you know. So that helps me solve the problem of um, what trade do I take. It's like I literally we have so many in our back pocket, and we have members like kind of constantly running through them that when something's working, you share it, and then everybody gets to kind of take a piece of that alpha. So it's um, for the new traders, it makes things a hell of a lot easier, and for those of us who've been doing this for a while, it kind of it does help feel like you like are contributing, which I think is at first it's not that important, but once you start to get it, like I don't know, you sort of, at least for me, like I sort of feel like I want to give back, you know, like it's a hard thing to learn, and so if I can make it easier for someone else, and that's not going to be a detriment to me, like why wouldn't I share it, you know? And none of us are trading, you know, 400 lots where like if I share an idea that someone else is going to be able to front run me and like not in futures, you know, like if you're trading penny stocks or something, yeah, don't share your ideas. You'll get totally front run. But with futures like ES, NQ, you're probably not going to get front run. Or you might, but like you won't know it. You know, you won't be enough of the volume. And like plus the algos are looking at the volume. Like our algo is looking at the volume, so like the signal wouldn't show up if that started to happen. You know, so we might get less signals or we might get more signals, but like we're still going to see the same thing. So it's like whoever can click the button faster technically could front run, right? But I don't think anyone is trading with enough size to make any of that matter. We're not. It's not that kind of algo, right? It's not like a high frequency algo. It's just a interpretation algo. It makes our discretionary trading a little bit more objective. So we traded underneath, right? The pivot here. We traded underneath. We did get a little bit of volume underneath the pivot, which is a little bearish, right? But now they're right in that spot where they need to save it, and this is probably going to turn green. So if you know what, let's just take it because it's kind of getting late. I'm going to take it with a little bit smaller size. But oh shit, I've got the wrong. Oh come on, the wrong thing here. Okay.
Order submitted.
Oh no. Hold on. Let's see if I can get it here.
Order filled.
There we go. Thank you. I forget that touching it is like a limit order, and to get stopped in, you need to hit Control mouse 3. So sometimes I'll hit the price I want, and like it's already past it, and it's like, well, it's your order's sitting there, but it's not filling, right? And so the only thing to do really is just to mark it in, which is embarrassing, but whatever. We're long. From 11, 5, 10, 75. Oh, I gotta make sure my stop's in the right place. So my stop needs to be like under this. And like I said, this is a not super high odds because we're fighting the trend. But if they hold this, it could actually come pretty high. I will be taking profits at 10 points though. Not all of it, but some. Because what also could happen is it could actually get up here, test this like high, what's it called? The print here, the delta print, and then just reverse. So before it gets there, I will take some off. I usually do this in thirds, typically. So I'll take a third, and then I'll wait for my actual target, which is the blue line here, 30, let's say. And then the rest of it, I will leave as a runner. But yeah, we'll do 30. We'll just do 30. It's late. I don't want to. Normally I'd do about 31, but based on where I got in. But I'm gonna. Let's front one run. No, we'll just do 30. It's fine. We'll do 30. And then yeah, if they want to take me longer, that's fine. But I will not trail my stop until I fill this. If we get there, you'll hear a cash register, which is my stop getting trailed. But I'm using a trailing drawdown account. So these prop accounts, that like it hurts you to hold winning trades that turn into losers just as much as if you lost the trade. So you do have to make sure you're taking profits if you're making money. You have to peel some off so that if it turns around, it's not like you lost the trade, because the trailing drawdown works from whatever your high water mark is. And I'm currently at the high water mark of my day, so for the evening, so like I have to be extra cautious about like taking more than 15 or 16 points to stop, because like if I take 15 points to stop, it's like that's fine. But if we make 9 points and I don't get filled, and then it rolls around and it stops me out 15 points below my entry, it's as if I lost like 21, or what is it, 15, 24 points, right? So yeah, it hurts you. It's a detriment if you hold it after being profitable. So here, like if I stop out, it'll look like I lost 15 points, but since it technically went positive 5 points, my trailing drawdown will actually the amount that I can draw down the account will decrease by like a measly 5 points, right? So you have to manage it maybe a little bit differently. Now I trade with Apex, and once you build the cushion, it's like if you have I have a $5,000 trailing drawdown, and so if I make $5,000 in the performance account, right after you pass the evaluation and all that stuff, you make $5,000 in the performance account, and then you make any more, the trailing drawdown pauses as long as that $5,000 stays in your account. So then you don't have to worry about holding runners and stuff for as long as you want. You can let them stop out, it doesn't hurt you. But if you bring your account down to 4,999, the trailing drawdown starts again, right? So, wow, are they just gonna stop us straight up? That's bullshit. Not even much of an attempt. Come on. So technically, I can add here. I'm not going to, but technically, it's valid to just add on the pullback. You leave the stop the same, and you just basically, and then I take profit back up here, right? And so basically, make the trade cheaper by taking advantage of the pullback. It's a really advanced move, and you don't want to do it, obviously, if the trade itself isn't valid. But I'm 99.9% sure that this is valid. It's just a counter trend trade, so like it doesn't always work. But it's valid. Like if it works, this is how it works. Like it, and if you recall, or the way I found it is this is a new low. It might not matter if it just stops me out, but this is a new low. All the volume is down here. We developed volume above that. We pulled back into that volume build, and we bounced. The reason why I say it might not work, even though it usually does, is that this is a double distribution. So it may not act like it usually does. And I'm very aware that if we do bounce, it's probably going to get stuck here. But that's all right. It may just stop out straight up, which is rare, but that's all right. I've got like 1 point. I put it a little below big figure because sometimes they just sweep that, so you can't really have your stop at like 11.5, 11.499. Like, don't do that. Now the tricky part is if they do stop me out here, like a couple points lower, and then they come right back in again, you can technically take it again if they trigger, right? If it triggers again, but it starts to get a little risky if that doesn't work, because this one should work, right? And so if they test just a little bit underneath it and then pop right back up again, that one better work. If that one doesn't work, something's probably wrong, right? So I didn't get stopped. You can't really see, but they like approached that low and didn't quite take it, and I have it like 2 points below that. just because, like I said, the 11,500 big figures were right there, and they're just assholes about stuff like that. Like they'll just if they can take liquidity, they'll take liquidity. That probably would have been the space to add actually. If I was distracted, I probably would have added that. Let's say if they can give me a chance to do it, I actually might. It's a tiny stop.
Order filled.
All right, we're gonna take it. Like it's literally gonna add like 4 points to my stop. I don't. It'll probably stop, but if it doesn't, it makes the trade like a great risk reward. So I expect it to stop me, but it's worth it.
Stop filled.
Yeah, they got me. Okay, that's all right. Let's see if it pops back up. And like I said, I literally gave away an extra like 5 points, so it's not that big of a deal. Because when it works, you got twice the reward there. So now I just got to see what they're doing. Now, like I said, it is really bearish. We are fighting the trend here. So that's part of the reason this probably didn't work. Oh, am I frozen? Fuck. Where? Okay, here we go. So now the question is are they going to steal my stop and pop it back up because we're right at the big fair? I would not be surprised. In which case it would be valid to take it again. And then it's just a question of whether or not you've got like the psychological what is it called, like stability, right? If we get stuck in this pivot, that's not good enough. It actually has to fire off here. But yeah, like the trouble is if you don't take it the second time and then it works, that might tilt you even worse than taking a second stop, you know. You just have to know yourself. And my rules is I can take it twice as long as I know it's valid, but I'm not going to take it a third time. Because usually if it's the third time, I'm probably doing something wrong. If something works 70% of the time, yeah, it's going to be pretty rare that you just get 3 or 4 stops in a row. So either it's not valid even though you think it is, or it's you're just wrong, which also happens. Sometimes you're just wrong. But I would not be surprised if they just stole those stops because of that big figure. I saw it when I was into the trade and I was moving my stop down there. I'm like, fuck, this is gonna cause a problem, isn't it? Tempted to take this with double size if it does trigger, because this is exactly what usually this is exactly how it usually works. When it doesn't work the first time, it just popped right back up there. It did trade underneath it. I do not need an algo signal here. I just need it to close bullish. The green candle is already like indicating that it's bullish. It's the problem is there's an orange candle right after it. That's interesting. That's an interesting problem. Those are inverse. I don't have a backtest for that actually. What happens when you have a green and then an orange in this exact situation? I'm not actually sure. If it then traps back in, is that a problem? Because the other way to play this is to take a short on an orange candle that happens below the volume build. But that would usually be up here. So I'm pretty sure it doesn't change anything, but that might be worth asking my coach about because it's rare. But I'm wondering because if it's a valid short, then it's obviously not a good time to buy. But you might actually be able to short this. But like I said, that's not the way I've learned. I wonder. Knowing they're inverse, you know. Is there anything else that tells me I shouldn't be buying this other than the fucking chart looks like a piece of shit? But when you're only looking for 15 points, it kind of doesn't matter. You just need the opportunity, which would be a close up here. Like I said, this orange bar is making me nervous now. I better be ready to take it. So that red triangle will only be valid if it closes bearish. It'll disappear forever if it closes bullish. That's a bearish signal that can only be on a bearish bar. It's just there because it's warning us. If it's bearish, it's going to be a triangle, indicating there's been some, like they're supporting that direction. There's basically just there's traders like trying to keep it from going up. We'll just say it that way. Like there's order flow to the downside. And we saw it here too, but sometimes what usually happens is when you get it down here and then you get a pop and when they absorb it with a green bar and you get a pop up above it, this is actually usually where it goes. Like this is a valid signal, which is why we took it. So when it stops and then immediately comes right back up again, it's usually okay to buy it a second time. But the problem here is that this is actually an absorption bar also, just in the opposite direction. So what really happened is they popped it off, and then the sellers absorbed it. And like I said, what I'm almost wondering if that just confirms this direction, in which case what we should be doing is looking for a short up here. And that makes sense to me. It's just not the way I've been trained to do it. Looks like they're going to signal me in.
Order filled.
It's another green one. All right, excellent. If they give me twice in a row, I'll just be done for the day, and it's fine. It'd be embarrassing, but it's like that's just the way it goes. The other one only went for like 5 points and then turned around. What did I say that was? I looked at it. 98. All right. So just moving the stop. And like I said, if they beat me, it'll probably be right away. You'd hope. And so when it starts to work, it's usually in good shape. And like it's a good. Oh, let me make sure my targets are. Fuck, that's the wrong tool. Fucking A. If you run and fill my target early, I'm gonna be pissed. Okay, 28. I wonder if I get 30. What's this? 26. Okay, fine. 28. It will automatically take profit at 10 points. It'll take a third off. 28. And then, yeah, it could go further than that blue line, obviously. But,
Target filled.
okay, nice. So I got a third off. Let's see if we can get another little pop here. And like with this trailing drawdown, I'm quick. But the last one I will hold as long until there's a reason to sell. So at least I'll get my stop back, which is nice. Let's hope. But that's the idea here. So no trailing stops yet. Stop stays under here, but see how they traded underneath this one and then shot it higher like that. That is usually a good a better entry than the first one, especially when it's right at the volume build here. These have the potential to go like 30 points, sometimes more. Doesn't mean it's going to though. The potential to do it and actually doing it are two totally different things. Where the stops are is they're up here, right? But see how this one snuck up again above this one and then went lower, right? So this looks really bearish. So if we break this, I think it actually pops, personally, because these guys, anybody who had a stop here was already taken. So I'm actually thinking that like this is probably where we're headed. Either that or it's just done. And it's only gonna, but then at least that way, if it is done, and like I said, I don't think it is, but if it was, at least I've got that third off, so it doesn't harm me quite so much to take that drawdown, because a third of my contracts are already out. And like you can, with a $5,000 drawdown and no max daily loss, you can recover from like a 10-point retrace, like basically 2 trades, right? So it's not the end of the world. It's just what you don't want to do is hold for 100 points and then like even let like 1 or 2 contracts come all the way back on you. Like it's just not worth it. That's just too much time to build that back. So what the result is, I end up having very small size when it actually does run, and I almost never hold it to the end. But like I said, once I make that first $5,000 in the performance account, that can change. And it's definitely been a learning experience to adjust from like a cash strategy to a trailing drawdown strategy. It really is different. Looking at ES, we're sitting right at the previous low, the Asia low. So if ES is over here, and you can't see it, but is it this? No, it's earlier than that, right? It is 11 Central. This one. right here. So see how it's sitting right there? So that bar needs to be taken back. Otherwise, it's just gonna get stuck in this channel. And if ES gets stuck in the channel, the NQ could too. But if this can break out of here, you can see there's probably liquidity up here, and there's obviously liquidity above that level. They just need a couple more buyers here. Let me just see if it. Oh yeah, so we got purple bar followed by star. It's hard to see because I've got so many other things, but purple bar followed by star on here is valid for a long. So ES did trigger as well. At 56, entry 56.25, close, stop 52. So maybe do like a 4-point stop, 4.5, something like that. If it gets all the way to the bottom, it's probably gonna stop you out anyway, right? Like, I probably didn't even need to put that extra point underneath the 500 because they're gonna get your. They're not going to leave anybody down there. I know they don't know technically where you are personally, but like they know where the liquidity is. Yeah, it's pretty hard to get away from those search and destroy algos, the high frequency traders that just basically test the waters and then push a bunch of size to steal everyone's stock. Like, good luck beating them, right? And that's why, had I seen that the fact that this bar lined up almost exactly with 11,500. Had I seen that before I entered the trade, I would have waited for this one. And I would have hoped, basically, that they cleaned that out before they go. Because that makes this so much better of an entry than this one. Because now all this liquidity is basically done, and they tried to push it lower and couldn't. Right? And if we can get above this orange one, it really can go, because then he is trapped. What I was concerned about, though, is if it's really bearish, these can be momentum moves. But yeah, like I said, it's a perfect example of where, like, I try to make it more complicated than it needs to be. Perfect example. You start to think like, wait, does it apply here? Like, yeah, just do what you're told. But what matters, like, you just got to know yourself, you know, like, know what you're good at and know what you need to work on. And then just make sure, like, you're working on it. Like, I know that's the case for me. I tend to overcomplicate things and make excuses and change the rules. And so, like, how do I, like, since I know that, I keep myself busy with new ideas, but I have pretty strict rules for the way I actually have to take the trade. It's like, I can get excited with the fact that, like, oh, that seemed, you know, some signal like this seems to work. Well, I can't take the trade yet because I haven't actually taken the time to back test it and make sure that it's working often enough. I need to, you know, I could take it if it's like, if this was a purple bar and this was a star, I could take that. But even though I know that the purple background followed by blue arrow is probably the same thing, like in same, I mean like the same concept. And I'm not trying to replicate it, but it's like the concept's the same, just a different way to measure it. I'm not actually risking real money on that yet because I don't have enough evidence, right? But I like to have it on my chart because I want to see if that's working still. And if it continues to work, I will add it to my repertoire. So I hope that makes sense. And like I said, since I'm building these, and since I have it on my desktop, like I could take out all the purple and take out all the arrows and then say, only give me an arrow if the previous one had a background of purple, right? And then all of a sudden I've taken two frequent signals and turned them into one very rare signal. And so that's how all of the signals on here are like the alert requires multiple conditions, right? It's not just like one thing. It's like this is happening at the same time as this is happening while this is also occurring. I don't have the alert conditions, like even if I wanted to share them, like if I try to like see like, oh, you know, what are the what's it called? Like what's one I know for sure what it is. Like what's the triangles, right? Like the red and the white triangles. If you go there, you can see the like what it looks like, but the alert is missing, and then all the settings are password protected. So like there's no way I can share this with anybody, which is smart since we pay for it, you know. But it doesn't mean I can't show you it. I just can't give it to you. You'd have to join the room to get it. But it's yeah, it's definitely changed my trading, that's for sure. So we're still long. Fucking Europe. I gotta get some sleep, you guys. This better either work or not work. I gotta work in the morning. I've got a 12-hour shift at the clinic tomorrow, so I'm fine if it stops me on my balance, but one or another, I'd like to see this resolve. Let's just say that. And I think it has actually a good chance of resolving higher with this setup, but it doesn't always work, especially when it's really bearish. But I think ES could probably get up here to like above 60 before it actually retraces, if I had to guess. I think it gets up here first. And I think NQ might actually get to 30. What do I know? And again, all the signals that are showing up on this current bar, the live bar, are going to come and go based on conditions that are changing. It's only when they close that they matter. So I know I see the arrow here, which is sometimes a sign that it's weak or that sellers are showing up, but it hasn't even closed yet. So it's going to have to most likely close down here for that to show up. And by the time it gets down there, it might disappear. Or it might close up here and then completely disappear. So until it prints and it goes on to the next bar, we really don't know what it's going to look like. See how it disappears? Because like the conditions changed. Like someone came in and pushed the market higher, and that shifted the condition that it was looking for, and that no longer exists. So once it closes, it won't move. It won't change anymore. Like these don't change, right? Like the star will always be there. This will always be green. This will always be orange. So wait, where's my? Make sure I did this right. 29.25. Okay, and that will take me. Yeah, that's pretty good. It needs to. So it's hard to see here. I'll show you on here. On Simon's, you can see the target needs to be between yellow and orange. That's our mean reversion target. And then the runners you can target, well, you know, wherever you think your target is. But if we just think this is a mean reversion trade where we're trading most of the volume inside this channel, well then you enter preferably on bars that interact with this like downstairs, and you exit on bars that interact with upstairs. But see how we haven't even touched the yellow yet? So generally I'm not like freaking out here. I mean, that might be wrong. The results might not be good because of that, but the rules are it really should at least touch the yellow. Once it's gotten into the yellow, if it starts to stagger and like struggle, I'm allowed to just exit the trade, since I'm using the allowed by my rules, I mean, because I'm using the trailing drawdown accounts. Like I said, if I'm pretty sure it's done, I can give away the potential. The problem with exiting early is that you miss out on every single time it goes higher than your target, right? Whereas, like, if I just wait, sometimes it will actually stop me, but sometimes it will fill at least this first target. So you need, and then if you're going to exit all the time early because it's struggling, then did you really have the risk reward you thought you did? And if not, maybe you can't take this aggressive trade. Maybe you have to wait for the one that traps underneath the big figure and comes back, you know, which means you won't get as many trades. But if you're never holding long enough to make it like more than 1-to-1, then, you know, this aggressive trade basically never gets you 10 points, let's say, then you can't really risk 15 on it, right? The more higher odds one, the trap back in works often enough that even if you didn't get 1-to-1, it'd actually be okay. All right, so we're getting close to that first line where things start to get real. But it's also very close to the top of this. See, these red lines I've added as like extensions of these pivots. That's all those red and green lines are. There's no green lines here because we've already filled all the lower liquidity, but at these red lines is where I expect liquidity to be. And then the green lines like here, like that's why you get this, right? So this is a trade signal where they cross the green line and they come right back at it with a star. Long. Even if this wasn't purple. When it's purple, even better. So like that was a long on ES and NQ. I could have technically taken out of both. Right? I just didn't. Nice. 28. Come on. A little more, please. This is where I start to get a little bit anxious.
Target filled.
There we go. All right, so got the second target filled. I got one more quarter. So now the idea is I need to evaluate whether or not this is momentum or mean reversion. If it's mean reversion, like in other words, like the chart, like does this have a chance to like run? Well, then I should hold the runners as long as I comfortably can. If I think that this is probably just balancing, then really any sign of weakness, I should just ditch the last one. You know, I can try to stretch it as far as I can, but if all I expect is balance, there's no reason to hold them. They're even if they do break higher than the first sense of weakness, it's not gonna usually just like break out of nowhere. You usually have some hints. For instance, in this case, a hint would be this guy getting trapped, and then they back test. See how they retested that zone here, this frustrated zone, and then bounced. So that's the kind of thing they do when there's momentum, right? Now the trouble with momentum to the buy side is that there's a bunch of trapped buyers up here. These stars were aggressive traders that got totally trapped, right? So it makes, and then here's all their volume, right? And when we came down, many of them exited their trade here. That's why because this volume is a draw from here to here, so it doesn't include their buy, but you can see that people sold right. This is a voodoo range level. They sold right at it. That's just how it works. And so now when we come back to reach that, they might sell it again because it worked here, right? They got a nice move, and if they think it's still bearish or it's just not bullish, they're gonna sell that spot again. And of course, if it's balanced, most of the trading is going to happen inside the blue lines. So even if it does pop up to 36.75, 36.75, it may not go much further than that because of those trap traders. The funny thing is that when there's trap traders on both sides, where there's like, we trap some longs and then we trap some shorts, it actually depends on who was more aggressive. Nice. Okay, so that's my stop getting trailed. So now it'll start trailing the stop, so I can't lose too much. Can't give back too much, basically. It's nice that we actually got one that worked. In Globex of all times. I guess technically London. But what was I saying? That yeah, if the guy that got trapped got like mercilessly I can't even talk, it's getting late. Mercilessly trapped, right? Like really, really, really trapped. It can actually produce a squeeze, but usually that guy will be at the bottom. So what it'll look like is this. Like on ES, we had a star down here. So getting above him, like we're trying right now, and then retesting and ripping, that can go up here, right? But if we can't develop any volume above him, they're just going to retrace. This one. So is it on this too? It is. It's just not purple. Here, we'll look at this one. So that area there had a aggressive short. Actually, these are all aggressive shorts. So ES has more of a chance of ripping than NQ does. It's testing above them, right? It's trying to trap them right now. So the question is can they hold the top of this and rip? Do they have enough momentum here? Are those trapped? Are there enough contracts down there short that are like, fuck, I got to get out of this, that they actually push price high enough to hit some stop orders, basically, to get like a squeeze? Like, that's the kind of setup you want if you're looking for a real, not just a mean reversion, but like a reversal. Here we have this guy, this orange one, who already got beat with a retest, and we have volume above him. The problem is that for NQ, it could come all the way back here before bouncing. Technically, it could do it again, and it might not bounce, right? Of course, if it did go down and then give us like a star up, like I could add my contracts back. And we've done that, like as it goes back and forth, like the thing moves like 150 points, but we got like 4 entries, so it's like all of a sudden we all have like we've hit our goal for the day, but like NQ has only moved like 150 points, but it like went back and forth and back and forth, kept on like reloading into these trap zones, and we're just like, okay, we're gonna buy them again, and then we'd sell them here, and then I'd come back like, okay, one more time, we're gonna try it. Those are fun, but yeah, you have to. It takes time though. I don't have that kind of time. If it starts to die here, I just kind of have to let it go, unfortunately, because I do have to sleep. But I don't see any signs of weakness yet. Here, we can look at the smaller time frame. See, that's potentially a problem. If he prints up here, that's a potentially trapped buyer, right? It's not there yet, but that kind of sucks actually. Okay, let's just get out of this. Damn.
Order filled.
I'm almost sad that I looked at it. So the conditions were met for a star to be here if they closed higher. So even if they don't close higher, what it suggests is there's actually a buyer that like basically FOMO'd at the top. Yeah, now they absorbed them. See, now it's gonna go down. That's okay. It's like, you know what? That's actually a short. No, it would only come down to like here. It's actually a short though. But I'm out. That's fine. And it doesn't always work. But yeah, what I saw was the star, whatever the conditions for the star were met, but that will only print if it closes bullish. So what I knew is that there is an aggressive buyer in that bar, and so if they beat him and absorb that buyer, we're gonna get an orange bar here, and usually that absorbing that he's basically trapped. That it's the same reason why this one was so powerful, right? We got this big aggressive seller at the bottom and then beat him. Well, here you don't see the buyer, but he's in there and he got absorbed, which made an orange orange bar, and now we get an extension. So like I could have just reversed, I guess. I don't usually do that though. Like usually I try to get my trade and then like I do my thing, you know. It's just like, okay, wait for the next trade. But technically that was a short. Let's see what happens here, and then I'll go to bed. It is getting late. Do you guys have any questions, by the way, before I go? This actually worked out well. I hope the audio and stuff is okay. I forgot to ask, because the last one I did, the audio was all fucked up, so I had to delete it. And we actually got some trades in there too, unfortunately. But this is what I'm doing basically every day. Are these little scalps that sometimes turn into more. Here, hold on. So let me see if I can show you this without like giving you all my account info. What the fuck? So that's today's. Remember, this is just London. So this is the one I took the stop on, right? So we got to stop and then we got to made it back. But I was trading earlier. You can say I was 12 for 6. So, oh no, sorry, 12 for 18. But earlier when we were recording, but it didn't work out. Like the recording was corrupted. I got 9 out of 9, and that was pretty sweet. But yeah, this is a pretty typical, not the 100, but the 60 to 66 is usually pretty typical for me, win rate wise, as long as I'm doing what I'm supposed to be doing. You can, lately I've been a little bit easy on the size. I know these aren't like impressive numbers or whatever when it comes to trade P&L, but when I'm trading on my own, I'm focused. I'm usually using 2 minis. When I am doing trade videos like this, I'm typically using 5 to 16, 5 to 15 micros. So, yes, of course, question, absolutely. Throw them out. Happy to answer whatever I can. Here, let me see. How do I sign into this chat? Yes, here we go. Go right ahead. By the way, if you want to get a hold of Simon, who runs the room, and he's the one who built the algo, this algo, right? This one. And then mine took this one and added to it. You can get a hold of Simon here. And then ask for a free 5-day to the room. Yes, it is. So, okay, so the way it works, this is Sierra Charts, is what the algo's on. The room I trade in is the trade and perform room. This is the email to the one who, the coach who leads the room. The way it works, there's two different levels of services, right? That you can be a member in the room, see his chart, like a stream of his chart, like just like this, right? He's a lot better than me and trades a lot bigger and is a lot better than me, and he's just using the easier one, right? And so you can see ES and NQ, and you don't even need Sierra chart. You can just watch his stream, which is live. And mine is laggy because it's on YouTube. He's using a paid service to, like, it's not even Zoom, it's like Blue Jeans, I think it's called, through his like Verizon something. I forget. It's fast. It's good. And so you can see his charts without having to like buy Sierra chart and do all that stuff, just to see if it like works for you. So that level, and then you still get like the morning prep and all the, you're in the Slack room. So as people are asking questions and calling out trade ideas or whatever, you're part of that too, right? And so that is $99 a month, which is honestly really fair, considering that, like today, like trading for the last couple hours here, I'm up like 400. So I've got like the next 4 months paid for in like a night, even trading micros, right? But then if you already have Sierra chart and you're familiar with it and you want to be able to like back test and build like stuff like more to it, or if you want my additions or just one of them or whatever, you need to have premium membership, which basically means it's everything else that you get with regular membership, but you also get the actual you get the algo on your desktop, right? And so like I've got all the studies like saved in here on my desktop, and then you also get like phone time with Simon to like work things out, and that is $250 a month total, right? Not in addition to the basic membership. It's just $250 a month instead of $99 a month. So it just kind of depends. What people usually do is what I did, is I started with this basic membership and just did like the $99 for a couple months while I like, it's kind of like drinking out of a fire hose at first, right? Like you're kind of overwhelmed with all the colors and the symbols. So like having it all on your desktop can be like even more overwhelming at first. So I honestly recommend that most people just kind of get used to watching his chart, and then he'll, since he's explaining it kind of like I am here, but maybe a little bit better, you start to catch on, and then once you feel like you need more, like you want to explore it more, you want to learn what else it can do, and you want to like build your own stuff, then you can you can do the premium membership from then on. So that's what most people do, is you do just the regular $99 a month until you decide, and some people just stay there, I'll be honest. Like some people are fine just watching the stream, making money, and being done for the day, right? They don't have to build on things and whatever. They just want a couple trades that they can take every day. All you really need is the basic then, right? But if you're like an overachiever and you want to like do more than just like a couple little patterns, and you want to like actually delve into it and see like just how often does this work, and what if I look at this chart time, and whatever, if you want to change all that stuff, you need to pay. It's $250 instead of $99. So the voodoo range levels. Yes, that is mine. So the voodoo range levels are some like my own pet project. That's not something I learned from Simon. They look like, I'll show you it. It looks like this. It looks like this. And so you don't have to be a member of the room to get these. Like I share these free with everybody. But the way I use these, it's not here. The red ones are volume points of control from the algo. I'm talking about here. We can do like, there we go. These are the voodoo range levels. And so the way I use these is when we get signals on the algo that correspond with locations, either the midpoint or the voodoo range levels, I'm willing to take the trade. So like here today during the day, like I had a number of opportunities down here to get in, but I knew I wanted to be long down here, right? And it was just a matter like you can't just buy every time it touches. Like you'll lose a lot that way, right? Maybe you'll eventually do okay, but you'll take a lot of losses. But instead, if I just know like okay, 11, 5, 36, 75 is an area I'm interested in doing business, and then I can, go to that like when we get there during the day, 11, 5, 30. So when we get there and I get a signal, like I'm confidently taking it, right? So I'm kind of like I'm mixing them together. Like the actual execution is the algo, but like if there was a star here and a star here and a star here, I'll just take this one, right? Yeah, totally. Here, let's look at ES. Let's take a look at ES quick. So ES, hold on, I got tons of stuff on here. Turn off the SVA. Okay, BSA, whatever. So, yep, glad I got out of that. That was a good short, by the way. So see how that short happened right at a midpoint. These dashed lines are the midpoints between the voodoo range levels. This one too. It doesn't have to touch it. It just has to be like in that location, right? Like this is close enough, especially for a retest. If I know I'm bearish. So like let's look at this one for instance, because this is a little bit earlier. We all saw this one we all saw. Let's look here at 37.73. Let's just say 37.73, and I'll do it with mine just to show you that it's basically the same. We'll do let's see. Whoops, that is NQES. Okay. I said it was the midpoint. Where the hell did that go? Here it is. 37.73. And it was around midnight. 37.73. Because I was trading this earlier. Okay. So this one, not probably close enough for me to take. Actually, this one didn't fire any other way. It was just there's nothing here. This one was valid because see we had a red line here. We traded beyond it and then we came down with an algo symbol. I've got these diamonds that Simon's not using right now, but like yeah, that would be a definite sell. And then this one is close enough. So I've got the arrow and also the orange absorption bar. That's definitely close enough. Right? So it's not like you need the levels, right? It doesn't make that much of a difference. But for me, it adds confidence for me to know which trades to take. So in Simon's room, right, you can see his chart, which looks like this. He's got all of these and a couple more indicators on all of these signs, right, are included in the basic membership, is to watch his chart and be in the room to see what people are doing and stuff and to interact and to get his like morning setup and stuff like that. But with the basic membership, you won't have these on your computer. You'll just see it on his like stream, right? With the premium membership that like I've got like I can go here and I can change stuff, right? It's like on my screen. We're not looking at Simon's computer. This is my computer, right? So it's on my computer and everything's already pre-done, right? But it is password protected. Like I can't like go in here and see like what all the settings are. But if I want to change, for instance, like what it looks like, I can. Or if I want to refer to that and say like what I've done is like, okay, tell me when this happens, but also this happens. you can program that if you know how to program in Sierra Chart, which is C++ basically, with just like a spreadsheet. You can just say like import the level of like this signal, and then when that happens along with this other thing, do this, right? So once you have the premium membership, you have it on your computer and you can do whatever you want with it, other than share it. But you can fuck with it all you want, or you just leave it as it is, right? Yeah, he does. Let me show you his. So this is his website. Has he been doing? Yeah, he's usually a little bit late. He doesn't add things to YouTube right away, but you'll get a feel for his style. That's his YouTube, and then when it comes to like all of his services, let me get you his webpage. Okay, so here's his little like blog. He's not super active on there, but like you can get an idea of like these are just examples of things he's adding in our room, right? Like we have a Slack channel that we all work together in, and so like every day, you know, people are not just Simon, but people are like sharing their ideas in the Slack channel, you know. And so in addition to watching his screen, even the basic members can like see what everyone has in mind. And like but the neat thing is that everyone's watching pretty much the same thing, right? So like here, I'll show you. Let me give you a screenshot. Or here, I know what I can do. I think I can just bring this up here. So like you can see that people are like adding their own ideas, you know, and like people are asking, I'm asking questions or talking about stuff, and like it's, you know, people are sharing their entries, and then, you know, he's adding like coaching and like charts in the morning and stuff. So like every like evening or morning, like we get his levels, right? And then so that kind of that comes with basic membership too. So for brokers, let me just see here. What broker do you use for Sierra Chart, or do you independently pay or buy it and recommend path to get Sierra Charts? I used to with a different broker. They dropped out of Sierra Charts a while back. I see. So I personally don't. So I do have a cash broker. I use AMP Futures, who goes through CQG, and so on I'm routing through CQG to get, like, I use the Denali for the data, but if I want to like send an order, it would go through CQG, and then it's routed through CQG, and it's my broker is AMP, but I'm not trading as much in the cash account. Lately, since this summer, I've been doing the Apex Futures trading prop accounts, which I've got a coupon code for that if you guys want to learn more about the prop accounts, but they're it's a cool system where basically you don't have to risk very much, and if you can prove that you know what you're doing, you can like get access to someone else's money to trade basically. And like I said, I don't recommend anyone does it without a edge, but once you learn how this works, like you can qualify an account. You know, you just have to take the good trades only. That's really the key. But quite a few of us use the Apex accounts in there, and then some people are just trading cash. But AMP Futures, I know, connects through CQG and goes to Sierra. So if you're looking for a cash broker that can connect through Sierra, AMP Futures is all right. I also know, what is it called? There's a couple other probably better ones than AMP. Their customer service leaves a lot to be desired. EdgeClear is a really good one. And I know some people use Tradeovate. Those are the two I know of that I've heard good things about in the room. But that, like I said, many of us these days are just using Apex because the risk is lower, but you can qualify multiple accounts and you can make good money just with Apex. And like, once you qualify, you don't really risk any more than your, it's kind of complicated, but if you want to know more about it, let me know, like DM me or something, and I'll give you some info on it, because it's kind of complicated, and I don't want to get into like spiel about it. People already know about how prop trading works, but it's a for those who have a good system and can consistently win, it's great. For those who are just like punting, it's like it's basic. It's never gonna work, right? So you really do need to know what you're doing. Cool. Yeah, it is. I know it's the YouTube is a little bit delayed, unfortunately. So the let's see, non-pro, yeah, not a non-pro account, but I so the Apex, the prop account, you can't get your Sierra chart to route orders through the prop account. That's important. You have to use Rhythmic or Ninja to do the prop account. But AMP, you can do non-professional routed right here. Like I can just go like I can trade right on the chart with AMP. Yeah, Edge Clear is actually really good. The Apex is a funding prop account. So like you have to pass like a it's similar to Top Step, if you know that. Like you have to pass a combine, like make 5,000 before you lose 5,000. Like there's rules, right? Like how many contracts you can take. It's a little complicated, but once you do it, they literally hand you, $150,000 to trade with, and if you make money in the real money account, like, and then you lose it, like you're not. They can't take your house, Whereas with a cash account, like you could literally get stuck in a position and they can like lien your assets. So like you do have to be careful with cash. You just have to have like other ways to sign on to it, basically. Like make sure you have like a what's it called, like a mobile app or something like that, so that if you get like a power outage or something, you're not going to be in a situation where you owe your broker money. But with the Apex or any of the prop accounts, once you pass, you're going to owe them a lot of money if you don't pass the evaluation, because it can take you a long time to do it. They're not very expensive, but people blow them up. It is kind of tricky. But once you've passed the evaluation, like as long as you continue to make money, like you don't risk any more than you actually made. So that's the benefit of the prop account. Do I have to pay for Sierra Chart? Yeah, you have to pay for Sierra Chart if you want to have it on your computer, right? Sierra Chart, you have to pay you have to pay for like the Denali feed. You have to pay for the CME fees, right? All of that stuff you do have to pay for if you want it on your computer. But what a lot of people do who don't have Sierra Chart, they just join the room as a basic member and just watch Simon's chart, and then you don't need anything. You just need a screen and like a speaker or headphones, and you'll see it, but just on Simon's screen, right? He'll see his computer just like you're seeing mine, but without the lag, because it's not on YouTube. It's on a better service that he has to pay for to make it fast. So you'll see his, and then you don't have to pay anything for Sierra. So that's how people usually start. But eventually, if you want to build on it, and make it your own, like change the colors or take off some signals and switch them, yeah, you'd need to pay for Sierra. For Apex, you buy the evaluation. It's not actually, you don't trade with your capital. You trade you have to pass the evaluation. Here, I'll show you. Let's see. Let me find it here. Sorry, hold on real quick. It's right here. I'll give you all the info. I got a good link here with a coupon code and everything. So Simon's active 30 minutes before the open until regular trading hours close is when his stream is running. So that's the drawback of the basic membership, is that you're not going to be able to trade London, for instance. Like you can only trade regular trading hours because that's the time when he has the stream running. If you have Sierra Chart and you have the premium membership, you can trade whatever you want. So yeah, it would be what is that, 9 to 4, is it? Yeah, 9 to 4. Here, I'll just put it in here. Central Time. So basically, regular trading hours plus 30 minutes prior for a like a team meeting, basically, where we talk about what the plan is basically. Um, and that's every day. Any day the market's open, the room is open. And yeah, you're seeing his chart, but everybody is like he's the only one talking on the mic, but we're all typing in the Slack channel too. So you have access to that info, but you're seeing his chart. And some of us do share stuff in the Slack channel overnight, but it's not very active. It'd be just a matter of getting enough people who want to train London, right? Who have it on their desktop. But for now, it's just there's only like 3 of us who actually trade London. Let's see, did I catch everything here? I think I caught all yours. I gave you so that's the all the info on the Apex there. That link will give you actually a 50% coupon too if you want to try it. But like I said, what I would recommend is learn how you need to be profitable to be able to do it. But you're basically paying like once you pass the evaluation, right? So like for instance for the 150 account, it's normally like $300, but with the coupon you can get it for like 150. And you need to make $9,000 before you lose $5,000. I said that wrong. Yeah, you make 9,000 before you lose 5,000, right? And so there's no daily loss limit, but you can't draw down more than $5,000. And you pay that either $297 or $143 or whatever the 50% off is. You pay that for as many months as it takes you to reach the profit goal. But if you fail, if you lose $5,000, you can reload it for $80, right? And so it's like, oh, and then once if you qualify it, then you don't pay the 300 or the 150 every month anymore. The paid account is just $85 a month, no matter what size account you have. It's $85 per account per month to run the PA account, the professional, the funded account. It's just $85 a month for licensing. You don't pay the evaluation cost anymore once you pass it. And you just trade with their money. Like the only money that you have at risk is any money that you make. But like once you pass the evaluation, you would be handed like $150,000 to trade with. You obviously can't pull that money out until you make it, right? The money you make, you can pull out, but you can't pull out the 150, but you can use it to trade. And it gives you like contract specifics, like you can trade 17 minis or whatever. Some people don't need 150, but I figured with 150, that gives me plenty of room for growth. As a 2 contract trader, as a 2 mini trader, I'm never gonna probably need more than 150. Is the way I looked at it. And once you pass it, it's $85 for all of them. So, but Simon has like 4 or 5 of the 150s, all qualified, and he uses NinjaTrader has this trade duplicator he uses. It's crazy. He pushes one button, right, and it sends trades to 5 accounts that he each takes with like 3 or 4 micros. So that way the individual account is very unlikely to blow up, but because losing $5,000 with like 3 micros in a day, you have to tilt pretty bad. But if you know what you're doing. But like today, I think he said it was like his P&L today was like $7,000 in each account. So like that's like a $35,000 day for him with the 5 accounts. It's crazy, right? Like I'm not doing anything like that. But that's why he runs the room. Like he's been doing this for a long time. He used to run a hedge fund. He's got a lot of experience, and he's actually a really good dude too. But I've enjoyed learning from him. I've been working with him for just over a month, or for over a year. It'll be 1 year and 1 month this month. So 13 months I've been working with him. But he's been running the room for I think it's 5 or 6 years, and there are at least a handful, maybe 3 members that have been there the entire time. It's not a huge room though. It's a small dedicated group of like real traders. It's kind of like trading with like a professional like fund, right? We just don't share money, but we're all trading the same basic trades. Everyone has their own little variation, but we're looking basically at the same thing, right? So that helps because you can learn from others who are either also learning or who have just learned, right? But I mean, it did take me a couple months to make sense of this. But then very quickly, once I started to get it, I was able to like build new trades, and before I knew it, it was pretty consistent. So, yeah, you don't need all these extra signals. You really don't. But yeah, like I said, I'm just an overachiever. But yeah, hopefully that's helpful you guys. I need to get some rest though. So I appreciate all the interest and stuff. Let me see, 9K qualifying, that is a single month. No, so it's a running total. You can take it as many months as you want. You just need to, until you reach that 9,000 profit target, you need to keep paying the every month, you need to keep paying the evaluation fee, right? So there's an incentive to get it done quickly, but like it's hard to get it done in a month. I'll be honest. Like with the 50% coupon, it makes it more reasonable, right? Because then at least like $150 for like 2 months in a row is not that bad. But like if you're paying like $600 full, like to get it done, you better like make some money in that thing, because all of a sudden like you're starting to build up another fee, right? But once you fund it, it's just $85 every month per account. But yeah, you're right that you would every month until you lose, unless you lose the $5,000, you can just keep building that account. And if you do lose the $5,000 sometime in the month, you just pay $80 to get it all reloaded, and then it starts from scratch again, as if you just bought it, but it's just $80. Yes, Apex does really send money. And I can, yeah, we have, like, we actually have like, what's it called? 1099s. I could literally prove it. They definitely do send out money. They do send you, they have rules for how you can do it. The first month there's a limit. Every month after that it gets easier. The first month I believe you can only take out $1,000 in that first month. And then the second month it like doubles, and so eventually it's not bad. But yeah, multiple people in the room have gotten payout, and no one I know has ever had a problem with it. I do know people who have blown up accounts though. It's not hard to do, but like I said, you pay the $80, you get it reloaded, no big deal. It's the cool part about it is if you qualify it, you have more money to work with and more contracts to trade than certainly that I would ever have access to, or that I would ever want to have at risk, right? And then if you want to qualify a second account, you can have up to 10. And then you can use the trade duplicator and technically double your account size basically. So like it's not, there is a limit, but it's nearly unlimited. If you really wanted to, you could run with it, and Simon definitely has. But yeah, he is using it, and then I think, let me count, I know of 1, 2, 3, 4, 5, maybe 6 others in the room. And the room has max maybe like 18 members right now. And he doesn't really do any marketing. He doesn't need to, but like I said, I'm just kind of living proof that it works. So it's I'm happy to share about it. But and he'll obviously answer your questions too if you have them. But he'll give you guys a 5-day free pass to the room if you mention that I recommended it, because like I said, he doesn't do any marketing, so the only way people really know about the room is from word of mouth. Unless you know him on Twitter, then you might have seen him talk about like the room, but it never goes on special or whatever, and so far the prices haven't actually changed. I wouldn't be surprised if they do eventually go up, but even with all this inflation and stuff, he's actually kept the prices the same, which is pretty fucking cool if you ask me. But yeah, and it's, I don't know, I've been in a number of rooms, and it's, when it comes to value, it's really quite a valuable service. But yeah, let me get some rest, you guys. It's 2 a.m. here. I got a patient at 8:30, so I gotta go. But it's been fun. I will do this again. And yeah, I guess this is a good time to be streaming. Next time we'll try to get some more trades. I'm really glad we got one that worked out nicely though. It's always good to have one that doesn't, that actually like runs a bit. And you can see, I mean, it did hit where we expected it to, right on the blue line, and it would have been fun to short it back down, but it did trigger, but I didn't take it. But thanks you guys, and I will see you next time. Have you seen the chart price difference in actual bid ask? Definitely an issue that I see from time to time. NT8. What do you mean by NT8? I'm not sure what you mean by NT8. You mean Ninja Trader? Ninja Trader, sure. Yeah, it's not the best. I agree with you, and the reason is because it's routing through Rhythmic, right? It's not as good of a data feed as Denali, but it's negligible. And if you use limit orders, it won't matter. But it's small. It's small. Yeah, sorry. At first I was like, wait, I know what that is. I couldn't think of it. Yeah, Ninja. Um, it. I definitely do occasionally see a little. It's not a significant lag, but if I'm watching Sierra Charts Dom and I'm watching Ninja next to that, there is a very slight like glitch every once in a while, right? But it basically the result of that in NQ is I might get like a 2 or tops 3 tick slippage if I mark it in. The way around that is just a limit order. Not as good as Sierra. So Denali, the Denali data feed that I pay for with Sierra Chart is by far the best that I've ever had. Super up, like really fast, and yeah. So the price that's on the screen is correct, right? Because it's on the DOM too. So this is the Denali feed. But like if we watched the Ninja DOM, what you'll see is like every once in a while there'll be like little moves that this one will just like lag on slightly. Oh, this is the micro though, so that's going to be worse here. Let me. The worst. It's worse on the micro. But yeah, you know what I'm talking about. I should get some rest. It's late. But yeah, Denali is the better one, and that's why I use Denali I pay for Denali, which is like the best service you can get on Sierra, and that way I have like the most recent information going into the algo. And on Simon's screen, he uses Denali for the algo too. So he's routing his orders through NinjaTrader, but you're seeing the Denali feed on his screen just like this. So you won't have any lag on the screen, but by the time you get to your NinjaTrader, there might be a little bit of a, like if you had a stop market order placed at like 87.50 or whatever, you might see it hit here, and then a moment later you'll hear it hit on your Ninja, and it'll fill you at 75 maybe, right? Yeah, cool, awesome. Like I said, thanks for your interest. I definitely appreciate you guys watching.